Hi everyone, welcome to our webinar today on protecting your condo from check fraud. I'm the host Corey from SparkPay. We have our expert panel with us as well. All right, so welcome again everyone to our webinar on protecting your condo from check fraud. I'm your host Corey from SparkPay. Before we start, we'll just go through the functionality. I'll introduce the panel and then we'll get to the agenda. You'll notice a Q&A button at the bottom of your screen. So we are going to leave roughly 15 minutes at the end to have our panel answer some questions that are submitted. So you can just click that Q&A button, go ahead and submit it. And then I'll start by introducing the panel here. So we have, and then each panelist, if you could just take a minute or two to introduce yourself. So first off, we have Garrett Stackhouse, condo lawyer from Common Ground Condo Law.
Hi, good afternoon, everybody. We're your friendly neighborhood condo lawyers, and we deal with everything that walks in the front door of a condo, including check fraud from time to time. Thanks, Corey.
Thank you, Gareth. Next, we have Layla Karam, commercial account manager with TD Bank.
Hi, everybody. I'm Layla Karam. I'm a cash management manager supporting commercial clients like yourself, and I'm here to support you guys with regards to check fraud.
And finally, we have Wally Vogel, CEO of SparkPay. Wally.
Thanks, Corey. It's a pleasure to be here today. Thanks, everybody. So I am the CEO of SparkPay. SparkPay does digital payments. I'll just share with you, I started my career in the early 80s when checks were supposed to go away in 2 years, and it hasn't happened. But SparkPay's mission is to make the checks go away and thereby prevent check fraud. So very excited for the webinar today.
All right, so Wally, I'll ask you to also cover the agenda and then we'll get started.
Okay, fantastic. Thank you, Corey. So Corey will be monitoring the Q&A box. And as he said, we are going to have a dedicated time at the end of the session in about 45 minutes or so for questions. So please send your questions in. We want to make this as helpful as possible for you. So in terms of our agenda, we are talking about a serious issue today, which is check fraud. You're going to be hearing some maybe scary stories from Gareth and Layla about what's going on in the industry and how prevalent that is. So what we're going to talk about is, first of all, understanding what is check fraud. And so Layla's going to take us through that. Then I'm going to talk a little bit about some of the common tactics that are used by the fraudsters. Gareth is going to share some real-world examples, and his examples are going to be specific to condominium corporations. And then all of us will talk a little bit about prevention strategies and best practices, and then we'll have our time for Q&A. So our objective is to provide you with a good background and understanding, some tactics that you can implement now to prevent check fraud, and then to answer any questions that you have. So that is our agenda, and without further ado, we will hop into understanding check fraud, and I am going to stop sharing my screen so that Layla can share hers and tell us about check fraud.
Thank you, Wally. Sorry, I'm not the most tech savvy. Just give me 1 second. Can you see my screen?
Yes, we can.
Yes, perfect. Okay, so my presentation objectives today will be essentially just going over the check fraud protection and how it works. So in today's environment and enhanced security and technology, why are we still talking about fraud? Because fraud is not going away. As payments have migrated to electronic channels, fraudsters have allowed and continue to evolve their technologies. No payment methods, either checks or electronic payments, are immune to fraud. As a result, it's important to evolve your response to layers of fraud prevention tactics to ensure to make fraud as difficult as possible for fraudsters. We're going to talk about both what's new in fraud and what traditional tactics are still continuing to impact you guys today. Most importantly, we're going to talk about is what we can do about fraud through increased awareness and education. It's critical that awareness and education does not stop here in today's session, but you share this information with your colleagues in your organization and review your internal procedures and processes around payments and address vulnerabilities and education gaps. Every organization should have policy and controls in place to monitor and prevent their payment methods. I hope by the end of this presentation, you'll understand more that no one in the policy can stop fraud. Fraud protection is a framework that includes education and multiple layers of fraud protection for your own defense. So what we're going to look at is businesses are attractive targets for fraudsters. Businesses are targeted to small, medium-sized, large businesses, particularly vulnerable due to large size deposits, range of payments vehicles that have access to lack of investments, cybersecurity, and cyber training, overconfidence that they will be victimized to fraud. According to 2019, from the Association of Certified Fraud Examiners, weakness internal controls are responsible for nearly half of the employees of thefts and frauds. So we can see that also that checks remain the most fraudulent source of payment fraud, with 70% of organizations who issued checks nothing to do with immediate plan to discontinue their use. So we're seeing a lot of customers have been frauded and they still continue to use checks as a means of moving money. So lastly, the last point for myself with the TD Bank, that check fraud is not going away. And that we'd like to give you the takeaway that check fraud is the number one fraud of fraud payments. So yes, as we know, check fraud is still a thing. And while personal consumers are rapidly migrating to debit, credit cards, and email money transfers, businesses are lagging in this regard. The Canadian Payments Association estimates that checks will remain around to at least 2050. So this is a form of fraud that business owners still need to pay very close attention to. So why is check fraud still happening? Well, technology is one hand has the more difficult and faulty checks fraudsters. They have been working overtime to leverage technology like high quality printers and scanners to hone their craft. So we find a lot of it's, they're making their own checks, etc. Low barrier to entry. Check fraud is not sophisticated. Does not take a lot of skill or investment to equipment. High quality paper, printer, scanner, and some basic expertise with Photoshop is all they need. So checks can be easily intercepted at any point of delivery service. So that's my point for check fraud from TD Bank. Thank you, Wally.
Great. Thank you, Layla. That's very helpful and kind of scary when you hear those numbers of, 80% of organizations being hit with fraud and then 70% continuing to write checks afterwards. Pretty staggering.
Definitely.
So I'm going to share screen here again, and we are going to look at just echoing what Layla said, some of the common tactics that are used. So probably the most prevalent right now is mail interception. So this is where you print a check and you mail it out to a vendor, but then at some point in the mail it gets intercepted. Okay, so and here in the GTA, just last year, 30% of the mailboxes in the GTA, the red mailboxes, were actually broken into. That image in the upper right, by the way, that mailbox with the danger tape around it, that's literally the mailbox here in my neighborhood, which was one of the 30% that was hit. So it's very common. I'm sure you've seen them. So one of the things is you can go into the post office rather than putting it in the mailbox for sure. But then the one thing you can't control is the receiving end. So when your vendor receives it, they might be, for example, in an industrial mall where there's a community mailbox, and that community mailbox can be broken into, and the checks can be intercepted there. So as Layla mentioned, it's not necessarily a high-tech type crime. All you need is a crowbar to get into a mailbox, and then you've got access to the checks. So that's where it starts. From there, then what they will typically do is alter the payee name. So what does that mean? So they get a check that you may have written to a plumber for $500, and they scan it. Okay, then they will use photo editing software to change it from Joe's Plumbing to Sam Smith, and then change the amount from $500 to $5,000, but it's still your account number on that phony check. It's still your signatures on that phony check. So when they then print it and take it to the bank, it looks like it's your check. It's got your account number, it's got your signature, but now it's going to Sam Smith for $5,000 instead of to your plumber for $500. The thing is, too, once they get one, if they intercept one check in the mail, they can produce dozens of phony checks from that, right? There's no limit really to how many they can do, except at some point you're going to catch on to it. And we'll talk more about this in a minute about how you can catch on faster. At some point, you're going to catch on, and then they'll have to move on to the next account. But typically, they will. You hit multiple times. If they intercept one check, there will be multiple fraudulent checks from that. Typically, the losses can be 100,000 plus from this type of fraud. By the way, on the deposit end, what they're typically doing is opening an account using a fake ID. So they're not really Sam Smith, but they've gotten a hold of Sam Smith's ID. They use it to open a bank account. They deposit the funds and then move on before you report the problem to the bank.
Well, Wally, the attendees don't have visibility to the Q&A, but just very timely here, we have Brenda weighing in that's saying, what Wally is describing just recently happened to one of the condos that I manage, a check for $53,000 taken right from a mailbox, altered and cashed out.
Wow. Wow. We will tell you how to prevent that going forward. Thanks, Corey. The altered pay email, I can speak from personal experience. This can be indetectable. Many years ago, I was running a different company, and we actually had one of our checks intercepted. And when my CFO gave me the check, I looked at it and I said, "Why did we sign this?" Because it was my signature on the check. It was indetectable even to me that somebody had altered this check. So they can be very good at that. And then finally, and again, Layla touched on this as well, is insider fraud. It's not necessarily a stranger intercepting the mail. It could be somebody, who has access to the check stock, because if they have access to the check stock, that's one step along. Who opens the mail in the vendor's office? I know of one property management company where they had a condo corp defrauded for tens of thousands of dollars, and it turned out to be the receptionist in the vendor's office that was responsible for opening the mail and would scan it and then reproduce the checks. So you've got all these fraud vectors to worry about, and unfortunately, the consequences can be serious. So at this point, I will pass it over to Gareth to talk about some real world examples.
Thank you very much, Wally. And I do have a real world example to show you. But let's first talk about, how does this impact condos? Our friend Brenda just showed us that, and I've seen it more than a few in my practice. First thing it does, it sucks up everybody's time. If you're managers or your board members, you know that your time is incredibly limited, especially if the condo's only paying you for 5 hours of your time, plus your back office staff. When you have to kind of undo whatever has been done to the condo, this is just time that nobody has to give to deal with this. Then you run into some political consequences. Sometimes finger pointing starts in the condo, either between like the board and management, or factions on the board, or maybe suppliers who are still at the property. Like, the political consequences can be pretty big in this. And I just chaired a requisition meeting on last week, where board was requisitioned for removal, and they said, well, no, we kicked out this old management company because they kept giving us POs that we'd already signed, and we knew the checks had already gone on. And stuff like that comes up and just hits your condo politically. The other big issue, account freezes. The moment, like check fraud, and Layla can mention this, it can lead to your accounts being frozen. And the moment a condo's bank account is frozen, you're in a little bit of a bind, including A, you can't pay your suppliers, and B, you might not be able to, where are you going to put the common expenses that are coming in 6 days? You really have to think through that when you get hit with check fraud. Like, can you imagine being in the middle of like a big CCDC project, and your next progress payment is, it might be 6 figures, might be 7 figures, is due to like the garage contractor, and you can't make that payment. And the garage contractor says, listen, we've got a statutory time period to lien you under the Construction Act, and we've got all these subtrades who are barking at us for their payment, and they also have rights to lien you, including every single unit at your condo. You don't want to be into that one. And then you get into like the legal costs of sorting out the insider fraud at your condo, whether you're coming to your condo lawyers to say, okay, we think we might need to sue so-and-so, or do we need to make an insurance claim, or do we need to like sign some stuff for the bank? What are we signing for the bank that says we're going to get this money back? And then you get into your insurance costs, including management. You guys, your company, they have D&O, or sorry, employee dishonesty insurance. If it's insider fraud, your condo, you have directors and officers insurance. For the directors and officers, if directors and officers are involved, do you have to make a claim there? Where does this take your legal costs for the management company or the condo? And if the condo's got direct employees, and some of you do, either office staff or superintendents, that can increase your legal costs. So I am just going to share my screen and put up, oh, Wally or Corey, you're going to have to let me share the screen, please. I'm just going to put up a redacted document. So everybody should be able to see, this says declaration form, material alteration, forged drawer's signature or counterfeit item. And what happened here, this was a condo in the GTHA, big condo. And what happened is I think they fell victim to both a mail interception fraud, where the fraudsters had also set up a bunch of, or stolen a bunch of IDs of people up in Northern Ontario and printed a bunch of new checks to all these people up in Northern Ontario. And at some point in time, either the management company or the bank twigged to this and said, why are we doing all these little checks? Because of course, fraudsters, and Layla and Wally can tell you, they start little. They might like do a little bit of touch, like, can we get $1,000? Can we get $2,500? And then they started doing like 5, 10, 8 grand, added up to quite a bit over time. I think it was 60 or 70 grand. And they come back to us and say, oh, okay, we've got these checks, and I'm not going to show you the check, but clearly like signed by, the manager and a director or 2 directors, or as the case may be. And we had to, with them, fill out one of these forms to the bank for every single fraudulent check and notarize them. And they had to spend quite a bit of money just having me say, yes, this is so-and-so's official signature. And these people, in this case, it was the VP at the management company, you're signing this to say, I did not issue or create this check. This check is not a check issued by us. It's counterfeit or clone check. And then they're saying, yeah, consciously believing it to be true and knowing that it's of the same force as effect, made under oath by virtue of the Evidence Act. And they say, we understand that making this is making a false declaration is a criminal offense. And this is the step that you as a management company or as a director, probably together, are going to have to go through if the bank is in a situation where the bank says, yes, we think we can, out of the goodness of our hearts and our client relationship, refund this money to you. And if the bank says, hey, we can't refund this money to you, then your condo is completely out of luck. And I see a comment from Jennifer Kelly. She says, never mind the accounting drama of the ins and outs of canceled checks and reversals and reentering. No, check fraud is even harder than reversals and reentering, but you've got to do that on the back end as well. So the fraud is bad. And I will say from the other end of it, because we are a supplier to condos, please pay your suppliers electronically. It is so much easier to track. When the approvals come in, like this meeting I mentioned last week, you can have your approvals dashboard and see, oh yes, we don't have to, doubly approve the invoice to so-and-so. It's already been approved. You're not going to get overwhelmed by a pile of paper where somebody manually has to back check whatever is going on in there. And then my final comment is, please pay electronically. Please track it. We actually, if you have shared facilities at your condo, we see this come up so often in shared facilities disputes where there are checks and people don't know where the checks are going or who's approved it. And it becomes a bone of contention in a shared facilities dispute where the real contention is the relationship between the parties. You don't need to have paperwork messing up your shared facilities matters. So I'll hand it back over to Corey and Wally. But all this to say, we see a lot of this. And I'm sorry, I got one more point. We also see a lot of small claims court litigation come in from check fraud, where maybe you had a small trade who was in, or your cleaners who can't lien. They reconcile their stuff. Oh, we didn't get a payment last year because that check got scooped out of the mailbox, or 2 years ago, up to 2 years ago, and there's a $12,000 small claims court claim from the cleaners you had last year comes in. Well, we got to go defend that. And then your accounting department internally has to go down the rabbit hole of where did this go and what happened. And again, you're spending time and you're spending money dealing with the consequences of fraud when you can avoid it with electronic payments. So with that, back to you, Wally.
Great. Thank you, Gareth. I'm just going to pick up, before I go on to the next slide, I'm just going to pick up on a couple of points that Gareth made. One of which is very serious, that we were speaking before the webinar started, that and Layla was saying, the bank will do what they can to cover, but there are definitely limitations to how much the bank can and will cover you in cases of check fraud. And there was a very unfortunate story of a gentleman that actually lost his small business. He was hit repeatedly by check fraud over the course of about a year and a half. And he had closed accounts and got new check stock and changed his processes and did all those things. And he was still getting hit and getting hit. And his bank initially covered him for the first couple of incidents and then said, we're out, we can't cover you anymore. He ended up losing $500,000 into check fraud and losing his business. He is suing the bank now. We'll see how successful he is, but his business is gone as a result of check fraud. So it can be very, very serious. But just to maybe lighten things up a little bit, I'll talk about one opportunistic case that I'm aware of. And this is quite a few years ago, maybe even before the sophistication of scanners and photo editing software. There was a service bureau that was processing payments on behalf of the Internal Revenue Service in the United States. And some of the people found that their tax payments weren't making it to their account. And when they investigated, they found out there was a lady named, I'll make a fictional last name, the first name is true, it was Iris Smith. And what they found that Iris was doing is she would take the checks that people had sent to the IRS and insert an I and then her last name afterwards. So this is how unsophisticated and almost comical it can be. So she was taking people that had sent checks to the IRS. Iris Smith was taking to the bank and cashing them. She cashed about $1 million in checks before she was caught, but obviously she was caught because it was her real name. I mean, obviously she was going to get caught eventually. So almost comical, except that there are real losses involved. So thank you, Gareth, for sharing those examples. So let's talk about how you can prevent it. And I'm going to facilitate this, but by all means, Gareth and Layla, please hop in as you're aware of some of the ones that are on here, or others. Gareth already talked about the first is to replace checks with electronic payments. As Layla pointed out, there are ways that electronic payments can be scammed as well, but they're far, far less likely. I'm going to say, a couple orders of magnitude less likely to get defrauded. And there are, just like with checks, there are best practices that you can implement with your EFT to avoid those cases of fraud. To control your check stock, or better yet, eliminate your check stock to protect your account number. Because if somebody gets a hold of your check stock, they have, a huge chunk of what they need to start defrauding your account. There's a specific question, and I might throw this over to you, Gareth, because somebody had asked me a question before the webinar. They had said they were going to be on the webinar today, and they were asking about delegating payment approval authority to the property management company. So this is now a Condo Corporation director that's concerned that their property management company has signing authority on their account, and was asking about that. Maybe you can comment on
delegation. Yeah, happy to talk about that. And the first place as a director you go look at the management agreement you've got. In every single condo management agreement I think I've ever seen, there's something about the manager's spending authority, and it's in there, and it's a hard dollar amount that says the manager can sign checks or approve payments, hopefully, for up to dollar amount X. And usually that's also coupled with, and it can't be for contracts for more than a year. And then there's usually something there that says, but if it's, ongoing payments, like, hey, they signed the cleaner's check or whatever it is, then those can be done. But go look at that bit in your management agreement. And then as a director, you sit down and you have a chat with your management company and your board, because you make decisions as a board, to say, how can we track this? Perhaps we'd like to take a bit more control. And that's where, if your management company is on electronic payment software, like SparkPay or anything else, there should be a dashboard where even if the manager has paid this, you as a director can see that, this, you can see the digital PO, the digital invoice. You can see that the payment was approved and by whom with the tracking. And that as a director can say, yeah, I'm fine with the manager paying this because now I can see that they've paid this and this is properly incurred. And I feel that we've discharged as a board, individually as a director, my duty to the condo, to the owners to say, yes, this was properly approved. And there's a backup for it.
Right. Great.
And actually, if we're talking about payments to condos, can I make one more comment?
Yeah.
Prevention strategies on here as well. Get all of your unit owners paying their common expenses by pre-authorized payment. Don't be taking checks. You can look at your bylaw, your general bylaw. It might be bylaw 1, it might be replaced over the years. There should be about Article 12, usually something in there about how payments are taken by the condo. And it might say PAP, or people got delivered a set of 12 checks for 1/12 of the common expenses for the year. Feel free to think about amending your bylaws to say, nope, we're only going to take payment by PAP. There was a case that was just released this morning, MTCC 1067 versus Numbered Ontario Inc. Numbered Ontario Inc. owned, I think, 7 units in this commercial condo and basically decided they didn't like paying common expenses, had not paid common expenses for years and years, and took the position that, oh, yes, I did a deal with the old management to pay in cash and I got discounts. And they had all these documents that the court eventually said, we don't believe these documents are real, evidencing like cash payments for common expenses. Again, get everybody on PAP, try to avoid situations where, in this case, the court says, I find that the owners failed to pay its common expenses and they owe the condo $495,000 and change, plus interest, plus legal fees, which for a smaller commercial condo, like, can you imagine the hole in your budget? $500,000 over like 3 or 4 years. So please, prevention, get all your owners on PAP. And that way, even your owners aren't going to say, I sent you a check, I slipped under the door, obviously check fraud. No. So back to Wally.
Gareth, I want to jump in here with just a comment in the Q&A. And again, I encourage anybody here, if you have questions, please submit them to the Q&A. After the prevention strategies, we'll move on to that. But Gareth, just for your quick reaction to this, because this was in response to what you were saying. Usually spending limit is $2,000. I have taken over a few condos that the previous management had sole signing authority. I would never do that, and it should be restricted.
I see that from Tim.
Yes.
Yeah, Tim, the spending limits are all over the place in the contracts I see. It often depends on the relationship with the management company as well as the size of the condo. For many condos, 2K is a great appropriate low limit. Another really big condos, like they might have like 5 or 10 or 15 in there. But Tim, I agree with you. And as a manager, you might want to say, you know what? I want you guys as a board to approve all the spending here. And that as a manager gives you, aside from the emergency spending that you're usually allowed to do under your agreement, just the authority and the backup to say, yeah, board, I brought this all to you. You had to approve it. This isn't on me.
I just want to jump in here, like prevention strategies. Not like the first thing you should be doing as a prevention strategy, attending webinars like this, listening to Gareth, listening to Layla, listening to Wally, and understanding how fraud happens and getting an education on it. So credit to everyone who's taken the time to attend, because this is really a good start for everybody.
Mm-hmm. I actually see a couple questions I'd like to answer, but after we get through prevention strategies.
Okay, great. So yeah, keep the questions coming. We're going to be very shortly, we're going to be into the Q&A session. So there's a note on here about reconciling bank accounts daily. And that may seem onerous, but I can tell you as SparkPay is, a proxy effectively issuing checks so that our condo corporation clients don't have to. We reconcile our bank account daily. And so what's that about? Well, if you reconcile your account monthly, remember we talked about the fact that if one check is intercepted, they can produce dozens of fraudulent checks. Well, if you haven't reconcile to your account for 30 days, that gives the fraudster 30 days to run around cashing fraudulent checks, right? And that's why it's so important to reconcile your bank accounts as frequently as possible, preferably daily, if you're issuing checks. If you're not issuing checks, it's still important to reconcile your bank account frequently, but maybe you can get away with a little bit less frequently than daily. Protect your digital, your scanned signature. If anybody's asking you to send a digital document with your signature on it, be wary of that because that can be used for identity theft. And Layla, I don't know if you want to speak a little bit to sort of identity theft. I know I was speaking with somebody. I just was speaking with somebody the other day. He's a well-known real estate agent, and he got a call from from a banker saying, are you mortgaging your house? And he said, no. He says, well, I've got a mortgage application in front of me for $600,000. He said, we're about to put this mortgage on your house. And he said, but he just happened to know the real estate agent, recognize him from his picture in the posters, and know that the person in front of him was not the same person that was in the posters. So I don't know, Layla, if maybe you can comment on the kind of identity theft aspect of fraud.
Yeah, of course. Well, like we see a wide variety of different, like we see more like the smishing, the phishing, where like customers are clicking on links and stuff like that, and the fraudsters are taking over their computers and changing the user rights and stuff like that. We do see that, and that's why we stress the importance of having dual authorization on any online banking platforms. We strongly suggest that, especially here at TD Bank. We find it's important because it's also another set of eyes, and also there's two provers on it. As I alluded to earlier, a lot of the time we see internal fraud. So it's understanding, educating your staff, and having that dual authorization is a big component. And also AI is up on the rise right now. So really understanding who you're talking to. And then just checking the email addresses and just doing a quick peek because I know it's just easy behavior just to kind of, reply back and stuff like that. So we are seeing a lot of time they're able to get in through emails and change things and communicate via your email and send instructions, stuff like that. My recommendation is pick up the phone. If you're especially dealing with like hard transactions, lawyers and stuff like that, pick up the phone and have a conversation with the individual just to make sure that they're aware that the money's being transferred back and forth.
Absolutely. Absolutely. Great advice. And you're right. AI is scary because you mentioned picking up the phone and that's something that I know
Mm,
a lot of the time we rely on. But I know that now with AI, they can sample your voice
mm,
and you can end up carrying on the conversation with
mhm.
a machine instead of a person. So
Yeah,
it's
it's scary. It's as we were speaking earlier, like, being in the commercial space, we have more of a hand holding with our relation with our customers, and the check fraud is rampant, rampant, rampant. Like they're watching people go to the mailbox, they're watching everything. So we recommend that you change your routine a little bit, just so especially if you're going to a mailbox or going to a branch or whatever. I'm not saying the fraud would happen within the retail bank, but again, just find alternative ways to move money and, go digitally through, Spark Pay and, you can talk to your bank as well as like even remote deposit captures, the scanner, having that in your office is also eliminate a lot of that because you're able to transact on behalf of your clients and stuff like that.
absolutely. And then also on here, we've got utilize payee name validation. So if you're not familiar with that, that's where when you issue checks, you send the paper check out, but then you send an electronic record to the bank as well. And SparkPay uses this. We actually utilize TD, which is a great service. And so for every paper check that goes out, an electronic record goes to the bank. When that check is cashed, again, it goes through as an electronic update to the bank. And if the two don't match, if the check was cashed for a different amount or to a different payee or with a different date or with a different check number, it flags it. And we're actually able to go in online and make a pay, no pay decision real time. So that's a way it really, it's one of the things where you're still issuing a check, but frankly, it's the piece of paper is not what's moving the funds. It's the electronic confirmation now, the electronic matching, the electronic confirmation that moves the funds. So it's almost like the check just becomes it's a document, but it doesn't move the money. The money is moved based on the electronic verification. So it's a great service. And in a second, we'll be talking about best practices and how that is one of the ones that can be utilized. Any other thoughts on prevention strategies before we get to a bit of a summary with best practices? Okay. Okay, we're coming into the home stretch, so get your questions ready. I see some coming in already, which is great. So for best practices, the best way to eliminate check fraud is to eliminate the checks. And that means, the best alternative obviously is digital payments. And the best practice is to go 100% digital. Okay, so you're leveraging digital payments to reduce checks, but it's really important. There are, some digital payment services that are not really 100% digital. Okay. So, I mean, if you're getting, for example, authorization by email, that's not truly digital and it's not secure either. If you've still got exception checks that are going, if you're doing a lot of your payments by EFT or electronic funds transfer, but you still do some exception checks, that is not 100% digital. All it takes is one check that goes out with your account number and your signature is one check too many, because if that check gets intercepted, they can reproduce it again and again and again. Okay, so really important. When you select a digital payment service, go with one that completely eliminates the checks, that only funds by PAD or pre-authorized debit from your account. And that way you completely eliminate check fraud.
Wally,
Go ahead, Corey. Yeah.
Wally, can you question from Corey from SparkPay?
Okay.
Can you just explain for everybody's benefit the difference between an EFT payment and an email money transfer?
Oh, yeah. Yeah, absolutely. So, the Interac e-transfer is a great system that we have here in Canada. It's really is a world-class way to send money from person to person. Unfortunately, though, it's not appropriate for business to business for a couple of reasons. One is there are amount limitations that are going to kick in. The second is you're often, not always, but often relying on an email address. And emails, we've got, tens of thousands of users on our system. On any given day, there's a few dozen that have their email compromised and are sending us, kind of a scam email saying, hey, can you change my account number or what have you. Fortunately, we have systems in place to detect those kind of things. We never just rely on email. But right now, a lot of Interac does rely just on email. So it's really not appropriate in that regard. For condo corporations, frankly, it's not an option most of the time because you've got an account that has dual signing authority. And again, you can't have dual signing authority for Interac e-transfer. So fortunately, you're almost protected from it by default. But yeah, that's a great point, Corey, that EFT or electronic funds transfer and Interac e-transfer are two very different methodologies. They might sound like the same thing, but they're actually very different payment rails. Fantastic. So what I'll call the second best practice is payee name validation. So if for some reason you don't want to or can't go with completely digital payments, you're still going to be issuing checks. The second best practice to protect that is the payee name validation. So it converts the check to effectively a digital transaction. The checks don't have your account number. They do still have your signature, so it's not ideal in that regard. But it will protect you from mail intercept and check fraud. However, it does require setup with your bank, so you have to set it up with your bank. You'll have to, on a daily basis, send them files. Whenever you issue checks, you have to send them files. And then it does require daily attention. So what happens, in our case, with TD, we get a notification about 10 o'clock in the morning, and we have until 2 p.m. to make a decision. So you can't sort of not be attentive to it. It needs every day between 10 and 2, somebody has to check the exceptions and deal with it. So there's some work involved there. Whereas if you go with a digital payment service that provides it, then you don't have to worry about it because they're looking after that for you. So those are the best practices. Maybe I'll just take a minute to summarize this. Any other input from Gareth or Layla before we summarize and go to Q&A? Okay, fantastic. So yeah, so I think what we've gone through, just to summarize, is check fraud is rampant and it's so prevalent. If it's not a question of if you're going to get hit with it. If you're writing checks, it's a question of when you're going to get hit. When you are hit, the consequences, as Gareth said, could be very serious. And it's not just about the financial implications. There's all kinds of implications for your condo corporation if you're hit. So it's worth protecting yourself. Best ways to protect yourself are to eliminate the checks with digital payments, or second best would be to use payee name validation to make sure that you're not susceptible to fraud. So that is where we're at in terms of the presentation, and we're now going to hand it over to Corey to ask the questions.
Yeah, there's some great questions, and Gareth, I note you indicated on Janetta you wanted to answer that one live, so you can go ahead and address that one if you'd like.
Oh, okay. Yeah. There's a question about, we got a money order that's payable to the shared facilities, and there's shared facilities problems. How can we cash this and split the money? So I can't tell you how to cash it, but I can tell you what the issue is. And the issue is shared facilities. It might be the happy shared facilities of the beautiful carriage homes of Don Valley Crescent, or whatever it might be as the name. Shared facilities are usually not their own standalone legal entity. By and large, they're literally just an unincorporated association based on a registered document that's an agreement between the condos, or between the condos declarants that was then assigned to the condos. So that's a huge issue with shared facilities and having bank accounts that are set up in the name of the shared facilities. So when you are contracting for your shared facilities or doing banking for your shared facilities, the best practice is to set up bank accounts in the name of Condo 1, Condo 2, and Condo 3, with signing authority for all of them, because those are the entities behind them. And the contract, say you've got a swimming pool that's part of your shared facilities, that swimming pool maintenance contract ought not to be between, Wally's swimming pool cleaning, that's his next venture, and the happy shared facilities. It ought to be between Wally's swimming pools and Condo 1, Condo 2, Condo 3. So if you go back to, we've got this money order, how do we do with this? Go talk to your friendly commercial banker who you have commercial banking relationships with at your bank. It could even be Leela if you need Leela, and ask them in terms of cashing it. But that's what the issue is that you run into with shared facilities, is there's not a real entity there, and you've got to have stuff set up the right way.
Thanks, Gareth. Layla, I like this question for you here. It's from Nicola, who's been patiently waiting half an hour for this one. With how easy it is to fake checks these days, do things like special check paper or secure printing make a difference, or should condos just move everything digital at this point?
To be honest, no, as I alluded to earlier in my presentation, it's an easy fraud, because they're getting more, like, if you see the items that they're presenting, you can buy a check stock and print it on, so we do recommend, if you're going to go ahead, use deluxe and use, like, those larger printing companies. But yes, within the organization, we are recommending our customers to go digitally, because be like real, like, it's a time spent going to the bank, for example, if you make a deposit. Also, the cost of checks, the cost of mail, stamps, etc. So everything, as we know, is increasing in price. So we do recommend, just on that side note, we do recommend our customers to move electronically, because it just allows for easy, seamless transactions. The interchange, the banks talk 4 times a day via EFT, such as electronic funds transfer. So you're able to get your money seamlessly within that day of the due date that the money's due.
Thank you, Layla. Wally, there's a question in here that I'd like you to answer, please. It's a good one. What are the potential risks of electronic payments? The management service provider I work for does not use electronic payment systems for vendors.
Okay, fantastic. So yes, electronic payments, as I said, are not risk-free. They're an order of magnitude safer than checks, but they're not risk-free. So I can speak to a little bit about what SparkPay does. I can speak to what some organizations have done poorly, and this is from the newspaper, so I'm not sharing anything kind of out of turn, Hydro-Quebec was hit by a vendor check fraud. So they used an electronic payment system, not SparkPay's, and I'll explain in a minute why it could never happen with SparkPay, but they used an electronic payment system, and one of their vendors emailed them and said, "Hey, we changed the bank accounts. Here's our new account number." So they changed the bank account and they kept sending payments. And after they'd sent about $500,000 in payments, they realized that no, that email had been hijacked. It was a forged bank document that was sent in, and somebody made off with $500,000. Okay. So, yeah, in that case, they were paying electronically and they were scammed. Um, and because we're familiar with that type of thing, we have for many years had checks and balances in our system. So we register vendors. When the vendors are registered, we always verify the email address that it's coming from on initial registration. We do that through a number of methods. I don't have time to go into all of them, but we go through a number of methods to make sure that we are dealing with the correct party. Okay. For new vendors that are getting a large, first time transfer, we have another level of checking. Our director of banking operations gets a flag anytime that an unusually large transaction is going to a vendor, an out of pattern, if you will, transaction, and then that gets a second level review. If we get an email from a vendor saying, "Hey, my bank account has changed," and we can't verify it through other means, we will, as Layla said, we will actually pick up the phone. We will call the public number of that company. We will say, "Can I speak to the CFO?" We'll verify that we've got the CFO on the line, and we will verify the banking information before changing it on our system. So, is any system perfect? No, there's nothing perfect. But, last year we moved about $2 billion. And out of that $2 billion, there's something like $10,000 that is, there's probably several $100,000 that went the wrong way because of mistakes, clerical mistakes, but we assist our clients in recovering. We've been able to recover everything so far except about $10,000 out of, and that's out of moving 2 billion. If that 2 billion had been moved by check, my kind of a conservative guess would be 10 million probably would have been lost to check fraud in those transactions. So yeah, so there is there's potential fraud with electronic payment, but a good service like ours is going to help you prevent it and train you to prevent it and do webinars like this to help you prevent it so that you will not have to worry about those losses.
Gareth, I see your hands up. Did you want to weigh in there as well?
I just wanted to jump on, and this is to say nice things about Wally. I am a SparkPay vendor. My own law practice that serves common ground condo law. I get paid by SparkPay. I have been through the SparkPay verification with Wally. I have changed my banking information and been through the SparkPay re-verification. So I can confirm it happens. It's thorough and it's not hard for your vendors to do. They just have to respond to the inquiries from SparkPay.
So Gareth, there's a fascinating question here from Monica. I'm pretty sure the answer is no, but I'm really curious to hear your thoughts. Can you detail if Canada Post has a level of liability? I assume this means for checks that would be stolen.
Great question. I'm not a postal lawyer. I can't answer that question. I saw the question come in and did some quick looking around. Obviously, there are criminal sanctions under the criminal code for messing with the mail, like mail fraud. But Canada Post, by and large, you buy insurance if you want to send something. Maybe I'll send a package to somebody and put some insurance on it. But they are limited to whatever insurance you put on it because, of course, I don't know what a stamp costs these days, simply because we don't really send mail. But like what, $1.29? I don't think for $1.29, Canada Post is going to say, yeah, we're going to indemnify you for $2 million. We don't know if you put a $1 check in there, if you put a $10 million check in there, but no. And I'm sure there might be consequences if it was ever proven to be an internal issue at Canada Post, but I can't speak to that.
Thanks for weighing in. I thought that was a fascinating one. There was another one here. This one would be for Wally or Layla. How does electronic payment look on a bank statement? Do the individual payments show up, or is it one amount? If it is one amount, how does an auditor reconcile? Is there a monthly report issued by SparkPay? So a lot to unpack there in Cindy's question.
I'll let Wally answer that because he can speak to the SparkPay piece of it.
Sure. Sure. So with SparkPay, payments are released in a batch, and there are various reasons for that. Just to simplify your banking. But when they're released in a batch, we provide a reconciliation report that always reconciles to the penny, so you know exactly where the payments are going. You also asked about the auditor. So we give the auditors, or you can give the auditors, temporary read-only access at the end of the year during the period of the audit so that they can go in themselves and they can see all the bills, they can see all the approvals, they can see when it was released, where it went, they can see the accounts that it went to, and they can also see the bank reconciliation, which obviously auditors always want to tie back to cash in the bank. And I'm pleased to let you know that all the major audit firms that do condominium corporations and most of the smaller ones are very familiar with SparkPay already, and they prefer doing an audit with SparkPay to doing a paper audit.
Thanks, Wally. I may answer this one real quick. It's a SparkPay specific one. Our management company uses a similar service, but only 2 board members who are signees see the invoices. As a board member, I'd like all of our board members to see the invoices. As volunteers, we can miss things. They claim only 2 of us can see. Would it be difficult for the company to set up all the board members to see all the documents? Irene, I can't speak for the service that your management company is using. I can tell you on the SparkPay side, our whole system's roles-based, and we do have a read-only role that can be used at year end for auditors, but can also be used for any and all board members that aren't necessarily in an approval workflow, but still want to have visibility to what's going on. Another question, Gareth, putting you on the spot again. This one's for you. So, does a condo corporation have any recourse in a situation where they've given a property management company signing authority and a check gets stolen and altered in cash? Like, does the condo what kind of recourse does the condo board have in that situation?
So recourse, are you asking about recourse as against the management company?
Management company, bank, like what is a condo
Well,
corporation supposed to do to
so
get that money back?
first, talk to your bank. Second, recourse as against the management company would only be if the management company has breached their contract. And breaching their contract would be, oh, an employee's committed fraud, and a management company employees committed fraud, or we did a check that we weren't supposed to do, or something like that. So then there would be, recourse within the scope of your management agreement. And of course, anytime you're talking about the relationship between a management company and a condo, we always say it is easier to fix your relationship than go find new management. So that would be your recourse there. Talking to your bank, potentially making an insurance claim. If it's appropriate to make an insurance claim, talk to your brokers about that. But quite often, like if there's check fraud, like you as a condo, you are at the mercy of somebody reaching into their pocket and giving you money back. Because, and this is the unfortunate thing, and Wally and Layla, you can weigh in. Like, it's not going to be prosecuted criminally, very likely. It's not going to be investigated. The police forces in Canada, but RCMP usually does like the bigger fraud stuff. They don't have time to go finding $2,500 checks and $2,500 from somebody who has, since moved the money way offshore. Like you're never going to see that again. So your recourse as a condo corp is, can our bank pay us back? Maybe, maybe not. Can our insurance company pay us back? Maybe, maybe not. Or do we now have a hole in our budget and our cash flow? That's your recourse. And you don't want to, as a management company or a director, be sitting there and saying, yeah, we've got the CCDC example I used earlier. We've got a $100,000 hole in our budget for this garage repair. And some of the sub trades or the primary contractor, they're going to lien us. And if we need to get that lien off the unit so people can sell their units or remortgage our units, we have to find money to bond off that lien, like up to the $100,000. Plus, we still owe these guys $100,000, plus the legal fees. So we are already like spending way more of our own money, our owner's money, to just address fraud. And if you can limit the opportunities for loss, limit your downside loss through electronic payments, please do that. And I will make one other comment, because our company, we get paid by check by some condos. And I see some more comments about Canada Post. Like, we got hosed by the Canada Post strike by our check paying clients. Like, I made less money in 2024 than I anticipated because checks didn't show up. I don't like that. And when people do pay by check, it takes forever. And in our own management system that we have, we know who the slow payers are. And we have to deal with them to say, come on, guys, you guys are over 60 days now. Oh, and I had a conversation last month with a director who said, dear manager who's been with them forever, find the nearest bus because I'm throwing you under that. Because of course, the check didn't come from the management company up in North York down to the condo in Toronto to get signed by two directors to go back to North York to go in a mailbox to get to us. And we said, guys, we can't do any more work for you right now because you owe us a significant chunk of money. Where's this money? So just avoid the time and the hassle. Pay electronically, please.
So I want to, we have 4 minutes left. I want to end with this one because, I lead business development at SparkPay, and this is something I run into all the time and I'm asked all the time. So I'm glad this has been brought up. I've noticed that for some condos with, let's say, more seasoned boards, I think they mean old, they prefer the tried and true method of checks, even when we show them the risks. Is there anything you found that works when trying to shift that mindset, something that helps boards feel more confident about making the switch? So Wally or Layla, would love to hear your thoughts on that one.
Mm-mm. To be honest, that's a difficult because we deal with that now. It's just it's the trust of having a relationship from my experience. I find that with that generation, it's them understanding the importance of what we discuss and showing them how we got to move with the time, right? And alluded to my in my presentation earlier was that by 2050 the checks are going to be obsolete, right? So that's why we have to kind of show the importance of, you know, kind of going with the time and, being evolving, right? So that's where it's the trust component I find on my end is demonstrating to our customers, because I had a customer where he was like, so no was his like kind of thing. And then by just talking to him and just, spending the time to show him and giving them the one-on-one kind of hands-on approach, it helps. So that's just my feedback.
And Wally?
So I think it's like any kind of motivation to change. There's the carrot and there's the stick. And obviously, we always try to use the carrot and show how easy it can be to adopt digital payments, what the controls are, and make people comfortable. Because you're right, there's a lot of people that feel like, hey, if I'm putting pen to paper, that's secure. But if I'm,
Mhm.
tapping some buttons on my
Mhm.
phone, that might not be as secure. So I think it's about, showing them the positives of that and the experience. But the stick, and of course, we don't wield the stick, but unfortunately it happens. I'm not going to name names, but there's a property management company in Ottawa that adopted our technology many years ago, but they had one board that didn't because they said, no, we like signing checks. And then I got a call in January. This was a couple of years ago. In January, they said, yeah, that condo is ready to come on board. They were hit with check fraud over the Christmas holidays. And it was whatever, 4 checks for $20,000. So it was $80,000. And in that case, Gareth, you're right. They weren't able to get recourse from the bank because of the repeat incidents. I think the bank covered them for part of one. And then, I don't know if they ever went after their insurance, but I think it basically left a hole in their budget. So that's when they were ready to go. But that's really unfortunate if it gets to that point before they make the change. But you've got your hand up, Gareth. Go ahead.
I do, just to add on to Wally's excellent points. First, I think while he's recording this webinar, he might post it on his YouTube channel. Send your difficult board this webinar. It might be on YouTube, Wally. Send this to them and say, take a look, because it goes back to Layla's point about education. In terms of changing behavior, David Farrow, pardon me, who must be a manager, says, as a manager, I charge them $8 per manual check. And plus they're paying that per check, plus some extra bank fees. Like, it's those sorts of, this is how you change behavior with the fiscal consequences. And then I saw a great question come in. Oh, and for us, like, we find this, like, hey, a new client comes in. We know that management company pays electronically through SparkPay. And we say, dear manager, why didn't this bill go? Oh, these guys are still on checks. We have a stock email we send them. that we will now amend to include the link to this presentation that is, come on, guys, this is such a bad idea. Please pay electronically, but in nicer language. And I see something that popped into the chat. Catherine Coop had said their corporation had a missing courier package in Canada Post, 25 missing checks. Canada Post didn't take any accountability whatsoever, and tracking it was very difficult. So there's the answer to the earlier questions about, does Canada Post take responsibility?
Great. I think we're at time, Corey. So
Yes.
so we should wrap up there. I'm happy to stay on for a minute or two if there's other burning questions, but we should respect time and wrap up there. For those that are eligible for CMRAO CPE credit. And I saw there was somebody in the chat box that said they were logged in under a different name. So we will reach out to you, but we will confirm, and we will be providing a list of attendees to CMRAO so that you will get your CPE credit. So thank you everybody for your time today. Thank you to our panelists, Gareth and Layla, for your valuable time. I think this has been really useful information. Thank you, Corey, for facilitating and wrangling all the many questions. It's an important issue, and it will get better as people are educated. So thanks so much.
I
Thank you,
thank you
everyone.
all. Have a good
Thank
day.
you.
Take care. Thanks.
Thank you, everybody. Thank you, Wally. Thank you, Corey.